All right, everybody, this is John, and welcome to the free video. And we're going to kind of step back here a little bit and just kind of see where we are. I'd had that as a pivotal level there for a couple of months, and you can see obviously we broke through 415. 415. The markets here on the SPY and the Qs and about everything else, we're up here at 3 ATR. The last time we were at 3 ATR, we got the pullback to the mean, which is normal. And I think that at this point, because remember, so tomorrow, for those of you that don't know, on the 19th is the major VIX expiration, that monthly expiration that typically pushes the markets down. Remember also we are at 3 ATR, that typically it increases the odds of a probability, again, of a pullback. That's all we're looking for, is a pullback. And then we also have kind of the great reshuffle happening in the NASDAQ, where they're going to rebalance it a little bit. And that would mean essentially implying they're going to have to sell off some of the large caps, because they're too heavily weighted in the NDX, and that got worse today with Microsoft making new highs, Nvidia, the list goes on and on there. But more importantly too, because there's the idea that, oh my God, we're going to crash. We've all read about the inverted yield curves and stuff like that. Or there's a monthly squeeze developing here, and this was in 2008. We did have a monthly squeeze and it fired short. This time though, it hasn't fired. The momentum is actually turning back up, and next month, which is 2 weeks away, give or take, this could be positive. It may take another month, so just keep in mind. And if we look at the Qs, I believe it's similar. Yeah, not quite, because it did fire short, and now it's kind of trying to recover here. But especially with Microsoft, new all-time highs today. It was just kind of plodding along this morning, and then news. I think it and Nvidia, some gaming company or something that they bought, they're agreeing to buy together. They both exploded, and it's just huge moves here. So I don't know exactly how the rebalance is going to go down, but when you have a stock like Microsoft, that's a huge part of it. The idea would be to sell Microsoft and buy some of the other ones, the LRCXs of the world, which are great companies, just smaller market caps, and kind of balance it out a little bit. And the fact that Microsoft and Nvidia and some of these other larger companies continue to rally, that's just something to keep an eye out for. Now that's going to be ongoing into July 24th, so shouldn't be any huge kind of a thing, but just something to keep in mind. And last but not least, remember what is supporting this market. What's supporting this market is a loosening of fiscal conditions. Now, the fastest fiscal conditions happened in history when you had the dollar exploding, interest rates exploding, and commodities exploding. So that's the dollar, right? And you can see that after peaking out at I think it was 113 or so, we're back under 100. That's huge. We haven't given back all the move, but that's a lot of relief, fiscal tightness relief. Because remember, when the dollar is expensive like that, it hurts the U.S.'s exports, because it costs too, it gets more and more, instead of 1,000 widgets, just give us 800, because that's our budget, and the exchange rate is throwing this off. Debt expenses in dollars, when people are paying by foreign currency, it gets more expensive. So that's fiscal relief. That's a loosening. And then of course we've already seen that with commodities. Commodities peaked and then have come off. And then so now, instead of having three things that are tightening, causing tightening, we just have one, which is interest rates. So that's what the market looks at. And at this point, this time next year, is it going to be like, wow, inflation is rampant and interest rates are now at 5%? Or is it, man, the economy is starting to kind of slow down a little bit and interest rates come down? And what happens when interest rates come down? That's the last tier of looser fiscal conditions, and that's good for the stock market. So at the end of the day, you don't want to fight the tape too much. I do think we're at a point where you want to be careful on the long side, but the idea that I do hear some things here and there like, oh, it's bloated, it's going to crash. I don't think that at all. And when we get a larger sell signal, we will take it. All right, you guys have a good one, and see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.